And hi everybody, it's Tim Reazor with Revere Asset Management. Let's see here, just after 4 o'clock here on a Wednesday night. So very quickly, stock owners and market lovers, before you and I begin our sojourn into the markets this evening, what I'm going to cover with you tonight is there's like a VIX conundrum out there, right? VIX was lower, stocks were lower. I'm going to explain that today, okay? VIX was lower, but stocks with OSD were lower, right? I don't think you've seen the whoosh yet. There's a whoosh to come, but inside of a larger downtrend that's obviously been taking shape in 2022, there are pockets of price upward mobility. And I'm going to show you where I think that might be headed if it takes shape. It's a big if. Like this whole market is in like this state of like the color beige, right? It's like in the middle. It doesn't really do anything for you. It's just beige. Like this is a beige market right now. That we're currently sitting in on June 1st. And so I'm going to cover all of that for you. But before we start, real quickly, look, any questions, concerns, comments, if you take umbrage with anything that I'm saying, all you have to do is go to revereasset.com, go to About in the word strategy, and you scroll all the way down and you can see all of us here. You got Danny, Don, there's my picture, Hunter, Mural, and look, we're all accessible to you. If you have any questions on strategy, like Don and Hunter do all the portfolio work. They do everything on the watch list. They do all the buys, all the sells. And whether you're a client or not, they are always available to you. It's what separates us from, the Edward Jones, Merrill Lynch, Lehman Brothers in the strip mall next to the vape shop, right? Like we don't have plausible deniability. We answer to you and we answer your questions because we're here to empower individual investors. And that's what matters most to us, is that we can help. We want to talk to America's fiduciary, and I don't say that lightly about Danny. America's fiduciary. We don't sell any products. We just do equity strategy. We make sure that we put you in a position to minimize any losses and maximize your gains. And you can see that through our anthology of videos and podcasts. I'll show you where to find that here in a moment, but you can get a hold of Danny. A lot of people do, especially when they have questions about annuities and how they're getting huckstered, or you've been told life insurance is an investment. Danny will set you free, man. And I'm telling you, he does that every day with clients. And real quickly, I promised you where I would show you where you can find our anthology of podcasts and our videos. And like if you click the podcast tab here, every podcast we've ever done is here. You can go back and see how we handled every market. And if you want to get really granular, every video, going back to when I started doing these in 2014 with Danny, you can see every day of how we traded the markets. So people say, do you have any brochures? And no one we don't make glossy brochures because that's what J.J. Snuffington does, right, in his ivory tower. We show you the actual work that we're doing. So it's a big difference. The podcast, by the way, these have been super well received. And I'm going to go so far as to say episode 400, 401. I mentioned this on this week's podcast, 402. If you haven't listened to them or given them a go on the video, I think the video is the way to do it. You don't have to sit at your desk. You can listen to it on your phone or watch it on your phone. I think it's the way to go. This episode especially, it really, boy, I'll tell you what, I've gotten a lot of good feedback on this. And so the last 3 especially. So anyway, hopefully that all helps. And then listen, stock owners, market lovers. One last thing, if you go to About Strategy, you can see the portfolios to which we run. We do retirement accounts, we do 401ks, IRAs for your company. There's Protection, there's Robotection. Click the hybrid portfolios and you can see what we offer there. And then one last thing, I get a lot of people that want to get a hold of me here on Twitter. So at TJ Reazor is how you find me. The other fellas, their Twitter handles are below their names, and my DMs are open. So even if you don't follow me, that's cool. You'll never get spammed. We don't spam people. That's not what we do. So if you want questions answered, we're here to answer them. If you want to have a conversation about markets or risk, we're here to do that for you as well. So anyway, with that, stock owners, market lovers, these videos, they're for what? They're for your edification purposes only. They are never, ever, 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 never, ever to be misconstrued as advice. You want advice, need advice, take advice. All you have to do is, in fact, give us a call. So let me show you the indices first, right? Let me show you how far I think they can move higher. And then let me show you why I don't think, why I don't think you've had the whoosh, and I'll do the VIX and what brings the markets lower. So here we go. Let's look at, I'm going to use ATR charts, right? And I've covered these extensively, what they are. Here's the mean. Here's minus 1, 2, and 3 ATRs, and then of course plus 1, 2, and 3 ATRs. I don't think the moving average charts are helpful here. So like, why use an ATR chart and not a moving average chart? Well, because look, price can, these are just lines on a chart, right? When you see panic buying, and what's panic buying? What would panic buying look like? It's literally the expression of FOMO on a chart. Like you've got plus 1,200, 1,300 ticks right off the New York Stock Exchange. Everyone's buying because they don't want to miss the move higher. And you'll, you know, there's an old saying from the Supreme Court. You'll know, like when you're looking at a certain type of material, you'll know it when you see it. You'll recognize panic buying when you see it. And the same thing with panic selling. You'll recognize it because it feels like the toilet flushing. That's the best way to describe it. And we haven't had that yet. And that's why this market's been so painful. It's been a series of programmed walks down. And that's the most painful trade. This whole episode, if the market is episodic, it's because it's being walked down. Oh, it feels like it wants to bounce back higher. Yeah, we're not that. It's not that bad. It's like you're like a frog being boiled in a pot, right? Where the frog doesn't realize it till it's too late. If he ever realizes it, maybe it's a she frog, who knows? That's what this market is. It's boiling you and you don't even know it, right? It's because it's being walked down, not whooshed. You need the whoosh to get out of this purgatory so you can get out of the clutches of hell and let the markets go higher. And we haven't had that moment yet. So anyway, let's look at SPY. We'll start where I like to start with SPY, Q, DIA, the diamonds, and then or the Dow, and then the small caps. So we'll get SPY here. So this chart I don't believe is helpful. Cap by moving averages, just lines on the chart, and they work in normal markets, right? But I think Fibonacci and the average true range is really impactful here. So a couple things about this chart. So what was today? Today was down 0.8%. Another bearish day in the markets, might someone say listening to this, but quite frankly, down 3. We didn't exceed the ATR. So is that a victory? I don't know. And so these are really wide average true ranges, folks. This isn't, when you're in this kind of selling, which I know you haven't experienced in a while, these ATRs make it extremely painful. The good news, you can say, the plus side here for bulls is that you held the 21, the exponential 21 exponential moving average as represented here by the mean. But you're capped here at +1. Can you get above +1? Well, when's the last time you've been to +1? It's like April, let's take our cursor off here, April 21st. And then you quickly just receded down. And so what am I pointing out to you here? Why point that out to you? I think you can get up to the 50%. That's the easy move, right? 423. If you can't do the easy move, this market is doomed. Okay. So if you can't get to 423, I mean, my gosh. So and the market has, I mean, maybe it's going to get there. That would to me be like the most predictable thing this market could do. We're at 409, go up to 423, shake out short participants in the market, and then somewhere in this vicinity potentially roll back over. I don't know if it's going to do that, but why point out to you April 21st? There is so much overhang to this market, and I know this is the indices and it's big and strong, it's S&P 500, but just take this analysis to your individual stocks. Hey man, this is an opportunity. The market pull back a little bit, it's going to go higher. Okay, here's your opportunity. It's going to pull back. Now it's going to go higher. Okay, now listen, I've said this 2 times before, but this clearly is your opportunity. And now here, and then what are we going to do? And so all these people they're saying the prayer of the investor, right? Dear Lord, please don't ever let me do this again. Buy the dip in a bear market as represented by a downtrend on charts below the 21, below the 50, below the 200 day. And I swear to you, I'll never do this again. If you just give me this little price, I swear I won't do it again. And so what happens? They all, the Lord hears, Lord hear our prayer. The Lord hears their prayers, and simultaneously price goes up. And what do? They honor their prayer and they dump. And then that's how you get, in fact, price going lower. And so a lot of overhang in the indices, man. And look, and a lot of it's algorithmic. We'll talk about that here in a moment, perhaps. This is the same chart, right? So 326 is where I would look for the Qs to move. I don't know if they're going to get there. That's the whole thing, because of what I'm about to show you in 2 minutes. You need to watch to the end, because what I'm about to show you in 2 minutes is why the markets might not go anywhere from here. So there's QQQ. How about DIA? The Dow, by the way, the strongest indices. IWM. Yeah, okay, it's all the same analysis, right? 190 perhaps on the IWM from 184. And by the way, those will feel significant because of where the indices are trading right now. But what do you really need to notice about this market? And now we will. Let us venture from the ATR charts. Let me show you the VIX here first. Did you notice the VIX, the people's VIX, the cash VIX, the VIX that nobody knows how to talk about? Oh, there's a couple people, but is the VIX at 25.69 too low? Is it too high? And most people can't tell you what it represents. And they're just guessing. I like to look at it through the standard Bollinger Bands, but what I need to point out to you is this, that markets are down again, and the VIX has been trending lower. Wouldn't you think if markets are down again, that the VIX would be trending higher? Where's the risk? Where's the beef, right? Where are the participants in the market concerned about risk? First 3 days of the month are interesting. We're in June 1st. Usually it's the jumper trade where a lot of pension fund, mutual fund, hedge fund money gets put to work. First couple days of the month. And today finished lower. It's super interesting to me. It doesn't mean tomorrow will finish lower. It doesn't mean tomorrow will finish higher. Just, man, that is something. That is a conundrum. How could stocks go lower and the VIX go lower, right? And so, because most people would say, hey, VIX going lower, stocks, equities typically go higher, especially in that algorithmic world that we live in. But how about DXY? What is the dollar doing? You have to be following the dollar. The dollar is driving metals, it's driving indices, it's driving, man, this is the lead car in the race. And the dollar just reclaimed the 21. So when the dollar was higher, let me see, what is the weekly high on DXY? I don't know why it's not showing on this chart, but there it is for this period. Let's see, I'm gonna go back. Oh, 112, all the way back in 99 to 2000 timeframe. If the dollar takes out this level here, we'll zoom back in. If the dollar takes out, let's go back to a daily, this level here, the markets most likely feel an immense amount of pain. There is a correlated relationship right now between the dollar and equities. And you'll notice that S&P was down 0.81 and the dollar was up 0.80, okay? I think you need to be paying attention to this. So if you go to your ATR chart, and we're starting from a lower position now. So the last time the dollar was high, right? When was the last time hit a high like 512? Okay, let's look at where the S&Ps are at on 512. We'll look at S&P 500 on 512, okay? 512, 517, 513. Oh, I was wrong. I stand corrected. They were a little bit lower. They were at 389. If you see the dollar surge, it is my thought that you will take out these recent lows, okay? You'll probably come down and sniff this low, if not take it out. If the dollar, though, doesn't, what if the dollar doesn't do this? What if this is resistance and the dollar for some, maybe there's some policy, maybe something happens. Look, I don't know. It's a market. Anything can happen, right? That's why nothing's ever set in stone. You're just reading what price is telling you, not, strong convictions loosely held, right? You're allowed to have mental flexibility. You don't have to be rooted in the position. It's the market. The market changes every day, and you should too, right? And so if the dollar rolls over, yeah, you probably go up and hit those S&P, QQQ, IWM price targets that I gave you earlier in the video. If the dollar surges, I think it makes it incredibly difficult for equities to go higher. It doesn't mean all equities will go lower. It just means that the ones that you've seen being shellacked probably get more shelled. And so what else could be hurting markets? This. So the TNX and the dollar are going up. And the TNX is kind of the same thing. And so the TNX peaks, markets get a little bit of a reprieve, the TNX finds support, and markets find trouble. Right. And so on 5-9, markets were lower than where they are here. And so come up and start taking out these highs. These interest rates, the TNX, by the way, how you read it, 10-year treasury, it's 2.93. And so if that is to go up and take out the recent highs, it'll do it most likely in tandem with the dollar. And you're going to see strong headwinds against equities. And then what are you going to see? This VIX won't be going down. It'll be going up. And that is, there's so many things are tied to the VIX, just algorithmic. I mean, this market isn't driven by you and I. It's driven by the algorithm. So I think if you see movement afoot in the dollar and interest rates and the VIX, you need 38.15 to be defended. That's probably that is a huge line in the sand. But this could have all just been, this is a weekly chart of the S&Ps. This all could have been just the relief before you get what I believe is it's not inevitable. Like it's a market, so anything can happen. But the halfway retrace from high to low, from pandemic to high, is 35.05, and I believe that is the trajectory with intermittent upswings that we are on. And so hopefully that all helps. Hopefully it makes it clear. If you have any questions about this, please don't ever hesitate to reach out to us. We are always available to you. And if you're like, well, how do we get a hold of you? Like, you can do email, but if you prefer phone, my friends, 855 Real Wealth is how you spell it out. But look, that if you're on a connected device, your phone, your tablet, you just hit that and it'll connect for you. So with that, I hope you have a great night. Listen, there are so many of you that send me all the love and support in the world, and for that I am grateful. Stock Nerds, we've been together since 2014, and I can't thank you for all the support you do give me. So with that, I hope you have a great night, and I will see you at the next update.